please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening and welcome to this special broadcast. I am Ritu Singh. India's trade deficit with China has widened to nearly $63 billion in FY18. In fact, the trade gap has doubled in the last 5 years. This comes at a time when India is under pressure from regional powers to cut its import tariffs ahead of the Regional Comprehensive Economic Partnership Summit in Tokyo in just a few days from now. Rituparna Bhuya joins us with more details on why India's import duty regime is causing a stir in the neighborhood. Ritu?
The Regional Comprehensive Economic Partnership is a 16-nation free trade pact that's under negotiation since November 2012 and will have goods, services, investments and IPR as part of the trade pact. This group of countries account for nearly 40% of global GDP. India and China account for about half of the RCEP economy. And once this FTA is inked, it will clearly be the world's largest trading bloc, and hence there is pressure on India to commit to very steep tariff cuts in the negotiations as it is one of the most lucrative emerging markets in the RCEP region, and the country perhaps could become the world's third largest economy by 2030s. Now, there are two meetings that are scheduled in the next 1 month. The first one is a meeting of negotiators in mid-June, and the second one will be a ministerial meeting which will happen in Tokyo, where trade ministers will discuss RCEP-related issues. We understand that there is considerable pressure on India to agree to cut down tariffs in a time-bound manner on almost all sectors. Till now, Indian negotiators have avoided giving any commitment regarding tariff cuts under the RCEP FTA. Now, why will it be difficult for India to commit to steep tariff cuts under the RCEP FTA? That's because of the humongous trade deficit that India has with RCEP members. Going by the latest figures of FY18, RCEP trade partners account for just about two-thirds of the 161 billion trade deficit that India recorded in the year. China alone accounted for 60% of the trade deficit that India has with RCEP. And we understand that many within the government, including Niti Aayog as well as the Steel Ministry and the Ministry of IT, they have cautioned the Commerce Ministry against joining this mega FTA. Several industry sectors, especially the steel sector, has also been lobbying to convince the Commerce Ministry to abandon the RCEP FTA negotiations.
Rituparna, do stay back with us. Now, this is also coming at a time when India's trade deficit with China has been soaring. So take us through the latest data and what's leading to this widening of the deficit.
China overtook UAE as India's largest trading partner in FY14. However, bilateral trade between India and China have been heavily skewed. Just look at the export numbers here. If you look at the value of our exports to China, you will see that they are yet to recover to the level seen in FY14. This in spite of a 31% growth that we saw in FY18. China's share of India's exports in India's exports basket has been between the range of 3.5% to 4% in this period. Now let's look at the import numbers, and you will see that the pace of increase in imports has been far more rapid. From $51 billion in FY14, we are now at $76.3 billion in FY18. And as a result, India's trade deficit has almost doubled in this 5-year period. And this has happened in spite of India imposing the highest number of anti-dumping measures against China. Last but not the least, if you look at a breakup of 97 broad sectors, two sectors stand out when it comes to India-China trade, and that is machinery and electronics. These two sectors account for about 50% of China's imports into India in FY18. And in the past 5 years, we have seen imports of machinery and electronics double from the levels seen in FY14 to what we saw in FY18.
Rituparna, thank you very much for bringing us all of those details. So just how alarming is the widening of India's trade deficit with China? Parikshit Luthra spoke to Anil Wadhwa, a former secretary at the Ministry of External Affairs in charge of India's eastern neighbours. He believes that India should not slash its duties and that the Regional Comprehensive Economic Partnership is not balanced.
Mr. Wadhwa, this is a worrying sign indeed. Unsustainably high trade deficit at $63 billion. Are we adequately addressing this with China?
Certainly, I mean, this is a concern. It's been a rising concern over the last few years. Chinese trade deficits have been rising with many countries. If you look around the world, you'll find most of their major trading partners are facing a similar situation. US is a case in point as well. Of course, as far as we are concerned, if we export about 1/6 of what we import, then that becomes a major concern to a country like India. In a phase in which we are trying to concentrate on Make in India, in a phase in which need to consolidate and make sure that our economy moves ahead, it's important that we address these concerns and take them up very squarely with the Chinese.
Has the response been right so far, sir? Positive so far?
Well, I think the last round of bilaterals which we had with the Chinese, these concerns were put forth in a very candid manner. There has been some amount of progress, although if you look at the joint statements by the two sides, it really doesn't seem that the two sides are talking about similar issues. But at the same time, there have been some change, for example, in our exports in key commodities like diamonds, like copper, for instance. Cotton will receive a shot in the arm because cotton imports from of the Chinese imports from USA are going down. So therefore, India offers an alternative. But most importantly, I think, is the pharmaceutical sector, where generic drugs from India have not been able to make much headway into the Chinese market, mainly because of protectionism. And that issue has been squarely taken up, as you know. We should expect some forward movement over there in the future. Also, the fact that the Chinese are now open to Indian companies coming together, investing in China in both information technology and pharmaceuticals.
Do you feel there needs to be a greater push from the Indian side to somehow address this trade deficit?
Yes, of course, there has been a greater push, greater realization, and I think in India everyone realizes the need to bridge this deficit as much as possible.
Yeah. If we talk about the Regional Comprehensive Economic Partnership, the biggest hurdle is the Indo-China trade deficit, sir. Do you feel, keeping in mind the $63 billion figure that we have in mind, would it be wise to give in to pressure from all the countries which are party to the RCEP agreement for more duty cuts? Everyone is pressing India for more duty cuts. Would it be a wise move?
Well, it's like this. I think amongst the countries who are negotiating the RCEP, we don't have a free trade agreement with the Chinese. We don't have one with Australia or New Zealand. So we have to be a little wary about opening our economy up to them without actual studies being done on what implications are going to be. But if you look at the general feeling in India, in the Indian industry, certainly China looms very large, and therefore asking India to open up our market and reducing tariffs by 92% does not seem a very good idea. India has been asking for 85% tariff reductions for at least these three countries with whom we don't have a free trade agreement, and that too on a graded scale. That is the way to go forward. And I think the other issue with the RCEP is that the agreement is not so balanced as far as goods and services are concerned. Now, Indian interest is very much in opening up markets for our services, exports, which has been our stand for the last few years. If it's a balanced agreement, then of course we have to look also into how much, what the provisions are with regard to investments, etc.
And my final question, sir, do you think that the RCEP negotiations could be concluded anytime soon, or we're far, far from it right now?
Well,
is it a gloomy road for the RCEP?
There is a desire on the part of most countries taking part in RCEP to finish these negotiations by the end of this year, and I think that's the stated goal by most of the ministers as well. Now, as far as India is concerned, I think we have some reservations about setting artificial timelines to it unless the issues involved are resolved to our satisfaction. I think the Indian economy is big enough for them to wait for us, and that is what has happened so far. But as going forward, I think Indian delegations will come under increasing pressure to finish and to reach that, to make sure that that timeline is adhered to. Right. But of course, as I mentioned, for us it's very important that we pay attention to how much we're going to open up to the countries that are not They do not have a free trade agreement with us, A, and B, that we get a fair deal as far as the services is concerned.
Thank you very much, Mr. Vadva, for speaking to us. So that was Anil Vadva, Secretary East, the former Secretary East in the MEA, somebody who's handled this issue very, very vitally, making it clear that the global community, all the negotiators to the RCEP agreement should understand that India has certain needs. It needs to safeguard its market and also address the trade deficit with China before concluding the RCEP agreement this year.